Hello, Jim here. Trading options, you can really make some good premium on a monthly basis. Now, when you add dividends to that, you'd be amazed at how much money you can make on a monthly basis. Today, I want to share with you how I do that, how I pick the companies I want to trade in, and my strategies. I'm also going to share with you the trades from last week, so stay tuned. I think you're really going to enjoy what I have for you. Let's go ahead and jump right in. I typically like to do a quick market update. I don't have much to add this week. We did have one bad day in the markets. It was related to the consumer price index, which was higher than what was expected. And the Fed has pretty much come out and said that any kind of a rate cut is off the table till probably June or maybe even later. And I think that kind of hit the market hard originally. But now it's kind of digested it. Yesterday was kind of flat in the markets or slightly up, and today it's up pretty big. So I think it's going to continue to move forward. And I think as news comes out, it's going to have a positive and negative impact. Like today, Cisco's way down. I think also Twilio is way down, and both of them, I believe, gave guidance that the rest of the year is going to be probably smaller profits than they originally thought. And that's the other big impact on the markets. It seems like anyone, if they have really good earnings, then they do shoot through the roof. Any kind of bad guidance or negative earnings, they drop like a rock. And that's probably going to continue. At least we're mostly through the big earnings releases. We have some more over the next 2 weeks, but not quite as many as we've had recently. So I wanted to share in this video that's really what's so important with selling options or investing in general. It's taking it slow and steady. Don't try to make big moves. Don't try to earn tons of money. I've had a lot of members who have come in, starting the membership, and they want to earn crazy amounts of money, 5-10% on a monthly basis. And that's not easy to do. And typically the more risk you take, the better you can do. But again, you're taking a lot more risk, and you're putting your account, your portfolio at risk. You can also, cause your portfolio to take some big losses, and you want to avoid that. So I really like to emphasize, keep it slow and steady. I typically will do one trade a day is what I try to do, 1 to 2 trades a day. Since my goal currently is like $6,400 a month and $1,600 a week for just premium. I find that I can't typically reach that goal with 5 trades. So usually I'll do 5 to 6, or I'll do fewer trades that are a lot more money. And, once I find a good trade and I do okay, I move on. I don't continue to try to, really make tons of money on, any particular day or week. It kind of averages out. And my current goals for selling options to earn premium, and not always selling options, I also will buy options in relation. I did a video a little while back about the poor man's covered call, and I purchased Palantir at $12, and then I've been selling covered calls against it. So, and that's also worked out pretty well. So I'm also adding that strategy in, and sometimes I'll do iron condors too. So, that's another important point, that you can kind of change your strategies. I've also found over time some strategies will work for a while and then they'll stop working. And it may be either because of the security you're using for making that trade. So you might have to change the security, or you might have to go to a different type of strategy, maybe go from vertical put credit spreads to iron condors, especially if the market's going flat. And I find I do that quite often. And sometimes, instead of using a company like Coca-Cola, maybe you need to try Cisco, which are both pretty flat companies. They don't shoot up like some of the others, like NVIDIA and Apple and some of those. Or maybe sometimes you need to switch to one that maybe is a little bit more volatile and does move around a little bit more. Now, what's key to all of this, though, is picking the right companies. The mistakes I've made have typically been by picking the wrong companies or securities. And just a few examples, I've given them in previous videos. I made a mistake with big lots, and I took a pretty good loss with Big Lots. I ended up selling it at the end of last year. And then Lumen. And I have a few others that aren't doing really well. I have Liggett Platt, which hasn't done well. And I think I've had it for 2 or 3 years. 3M is still struggling. I do think it's going to come back, so I'm definitely going to hold on to it. But I've been finding that I'm defining, I've typically always have wanted to pick up dividend growers, not just dividend payers, but companies that are paying a good dividend, have plenty of cash to pay the dividend, but then are also growing dividends. But now I'm also looking at what I like to call income growers. So now I'm looking at dividend growers and income growers. My income growers are companies like Palantir, other companies like Square or Block, maybe Twilio, depending on what's going on with that, or maybe even AI Path or some of those types of companies. Companies that have potential, they don't pay dividends, but could grow massively. And that's like what Apple was many years ago, or even Microsoft in its early days. I think it was a long time before Microsoft paid a dividend. When they did pay a dividend, it was quite a large one. But I'm changing that strategy a little bit. I'm not just focusing on dividend payers anymore. They're still a priority and an important part of my investing, but I'm also looking at what I call income growers. So, and then depending on if you're looking at income growers versus, dividend growers, the strategies need to be a little bit different. The guidance or guidelines that you take also need to be a little bit different. Maybe you use a different delta, maybe a less risky delta for an income grower, and maybe a higher delta and a little bit more risk for a dividend grower. And I've also done that. I'll share more of that at the end of the video, where I share all my guidelines, the factors I use to identify the companies, and what I call my weekly planning worksheet. And I'm going to go over that at the end of the video, along with the trades I did last week. So definitely stay tuned for that part. And then I also like to talk about that, so you might have different guidelines depending on what kind of companies you're using, but then you also might have different guidelines related to if you're using ETFs versus individual companies. ETFs are, in my mind, a lot safer than companies. Not all ETFs, but I haven't made any mistakes with ETFs where I have made mistakes with companies. And again, the details related to those guidelines are also in my spreadsheet, my weekly planning spreadsheet. And then I also wanted to mention that selling options or trading options is kind of more of an art than a science. I get a lot of people who want to know specific, what can you make every month? What's the exact amount of capital? And it doesn't really work that way. It's, from month to month, it differs. From year to year, it differs. Your strategies differ. And being a good investor, you kind of recognize that. And I also found that if you don't diversify too much, I think over diversification can hurt you selling options or trading options. So I'd stick with fewer companies, and I try to pick better companies. And I found that I've been doing that more recently. The ones that I'm having issues with now that, again, I mentioned Liggett Platt, I've had for many years or several years. They're not like new companies I've decided to invest in. Most of the new ones over the last 2 years or year and a half have done quite well. So it's more of an art. It's not a science. It's not an exact number. So when I say, well, you can make up to 3% a month, which is what I found I've been able to do with my accounts, I may have some months that are 4% and other months that are less than 1%, maybe 0.5%. And again, it all depends on the markets. It depends on what's happening with the particular stocks that I like to trade in. So I just wanted to share that. I also wanted to mention it's a little bit more complex too with the amount of cash. If anything, if you're curious about how much cash, I usually keep around 30% cash in my accounts. Now, I do have what I call my Fidelity IRA that I moved my 401k into that. I converted my 401k from AT&T into an IRA. Now, that account is mostly cash, and I'm running the wheel primarily. All my other accounts have like 25 to 30% cash in those accounts, and I typically take less risk compared to running the wheel. I also will take a little bit more risk. Now, I encourage you, if you're thinking about how much cash you need, it's better to have a little bit more. If the market takes a dive, it's kind of like what Warren Buffett says: when others are fearful, it's better to be greedy, and when others are greedy, it's better to be fearful. So if the market takes a dive, it means there's some great opportunities to pick up some companies at great prices. So it's really good idea to have some cash available to be able to do that, to be able to put some trades in or outright buy a company that may be a deal. So I wanted to kind of share those points. And again, to mention to people, it's slow and steady. It's not get rich quick. It's learning the right way to do it, and then kind of redirecting the ship slowly, not radical turns, and then, improving on your technique as you go. It's not get rich quick and, again, turn too quickly or make radical changes too quickly, because that will sink the ship. So let's take this next part. I'm going to jump into my planning worksheet from last week. Now, I have updated it. This past Sunday, I always send these out on Sundays. I sent it out to my members, and I did add some additional columns. So the one you're going to be seeing here is from the previous week. The newest one is a little bit different, at least for the members who have seen it. They'll be wondering, well, where's these 2 or 3 new columns? And I may share that in a future video. And as always, if you're interested in my memberships, details will be in the description. I have 2 main types of memberships. One is just a basic $10 a month. You can get a week free. You get all my trades. You get access to my spreadsheets. You get my collections. What you don't get is you don't get access to Discord, and you don't get the weekly one-on-one with me, which that membership is a little bit more. It's $25 a month. Again, you get a week free to give it a try. And I currently have like 83, 84 people that I believe are in that membership. And I've cut that off at 100. I primarily did that to try to get people to come in. And I enjoy spending time with people, but I don't have too much time. It's going to be hard for me to go beyond 100 people. So just wanted to share that. And let's jump into the next part of the video. Now I've opened up my weekly planning worksheet. Again, this is the one from February 4th. So this wasn't for this week. It was for last week. At the top, one thing I forgot to mention at the beginning of the video was, you probably noticed in the thumbnail, the 8,334 on a monthly basis. That includes nearly 2,000 in dividends. So again, I've been a dividend investor for a long time, and I really like how Schwab does this. I haven't found a similar page with Fidelity, but you can see on a monthly basis up here, I'm bringing in 1934.66 for the next 12 months just on dividends. And I hope to increase that to a certain point too. I've sold off some dividend payers that to me weren't, they weren't performing well enough. And I want to add in some additional better paying, healthier companies, or better paying dividends, that is, healthier companies, and some ETFs. Like I really like SCHD and XLE, are really good ETFs, and they both pay, I think, around 3.7 or 3.8 dividend on a yearly basis, or distribution. I believe the ETFs, they're called distributions. But I just wanted to share this. And you can see I get most of my dividends quarterly. So I get them in March, June, September, and December. Then I get a smaller amount on a monthly basis. So, and that's been a pretty core strategy of mine. And this, again, I've moved most of my retirement accounts. So this doesn't even include dividends and stuff that I get in my retirement accounts. So let's jump back into the spreadsheet. So the ones in green where I've marked the trade date are the ones that I've traded. I list any options that are going to be expiring over the next 3 weeks. So I'm going to only talk about the ones that are green. So this is actually a poor man's covered call where I wrote a covered call on Palantir. And I actually rolled it. Originally it was $19. I rolled it up and out to $25 expiring in January of next year. And that's because PLTR shot through the roof. I brought in 218, and my cost basis is 2,098. And again, this is a poor man's covered call. I bought 4 contracts at $12, and I think I paid like 2,400, 2,500, and this is the second covered call I've written on it. And the value of those 4 shares, if I closed them right now, I would probably double my money. But I want to keep those 4 contracts and potentially turn them into, 400 shares and keep the company long term. It's what I call an income grower, and I'm hoping at some point it may shoot through the roof. It's a well-run company, and it really has a good grasp on AI. Next is COP. This is ConocoPhillips. And I like ConocoPhillips. I'm beginning to maybe change my mind, and I may try to get out of these trades for ConocoPhillips and switch to XLE because I like the owning a bunch of them versus, one in particular. But this one has done pretty well. It's right now still, I think, around 110, 112, something like that. And I initiated this trade back in 11/29/23. So it's like the second or third one I've done on it. I brought in 232 in premium. I just rolled it out and kept the same strike. I believe it was expired, February 16th, and I rolled it out to 419. And the capital, since it's a cash secured put, the capital's a bit higher for this. So the yearly return is a little bit lower. And for yearly return, I'm just taking the premium divided by the required capital broken down for years. So 365 days divided by 72 days till expiration for April 19th. And then all of these others I haven't done anything with. I mean, I might have done something this week, but at the time of working on this spreadsheet, I did not do anything with them. I also had IWM 175, 165 in my Roth Fidelity, a vertical put credit spread, and I rolled it. Again, kept the same strikes, rolled it from, it was expiring 216, rolled it out to 417, brought in not as much premium as I typically do for IWM, but it still has a fairly good return because of the lack, or the required capital is a little bit less with it being a vertical put credit spread. So, and it's like a 48% return on that trade. And IWM, I use it like a lot of people use SPY. I just prefer IWM because it's a little bit easier on the pocketbook. Instead of being $500, it's like $195, $200 right now. This is DocuSign. Now, I'm a software developer and I'm working on a product potentially to compete with them. So I like to kind of keep an eye on them. And I thought, well, why not sell a cash secured put on them? So this one is a new trade, cash secured put, a short strike of 45. It was currently 51.62, expiring in April. And I brought in $304. So a good amount of premium, about just shy of an 18% return on a yearly basis. And I think I did two contracts. Yeah, I did 2 contracts on this. So, not bad, almost 18% yearly return. Next, I did Procter & Gamble, and I've owned Procter & Gamble a long time. I've owned the PG shares probably going back 10, 15 years, so they're very, very profitable. Here you can see 10/1/20 was the initiation date of running covered calls on this. This trade I did on 2/7. It was at 160. The current price was right around 160. So I rolled it up a bit, 165 out to 117.25, brought in $493 in premium. And this turned out to be a little bit higher, or quite a bit higher than the yearly dividend. And I went a little farther out because I am trying to gather some cash right now for down payment on some property. So I was really happy to pick up $493. And I believe this is in my Schwab One account, which is what I use to collect money for, down payments and different things. And again, 6.92 more than doubles the dividend. And for covered calls, I typically try to double the dividends. I think I had mentioned that it was a covered call. And then next is Devon, and I ran the wheel on Devon, and now I sell covered calls on it. So this is a new trade for Devon. Covered calls 47.50, I believe. Yeah, just shy of $42 was its current price, and the delta is 0.2669. Again, I like 20 some deltas related to covered calls. Now this Procter and Gamble was probably a little higher than 20 delta, probably closer to a 35 delta. And then again, the current price was 41.96. And I brought in 204. I typically try to get 100 per contract, and I was able to do that with this, and I'm basing it on my cost basis. So it was like an 8.34% return. Again, more than double the dividend. Did quite well with that. And so the weekly total is 1633. So my goal typically is 1600 on a weekly basis. So I did a little bit more. And this week, I'm doing about the same amount. I'm thinking I might finish the week with closer to $1,800. And again, I've got favorites that I share with my community, my memberships, different companies I'm looking at with just a little bit of detail. I used to put option information out here, but I found that the way the market closed on Friday was typically very different on Monday, so I don't do that anymore. I just primarily provide the current price and what type of trade I would like to do, and then a little bit on the reason why I like the company. Then I have checklists. These are the different reasons I look at a particular stock or ETF compared to a different one. Then these are guidelines related to my trading. I don't know why. I must have hit Z when I was doing this at some point, but this should be calls. So these are primarily guidelines, and again, it relates to what type of security it is. So, and I update these probably every couple of months. I'll make some additions and changes. Also, my goals, what I'm trying to achieve for the year. And I went over this on a previous video. I don't currently have anything in dividends or closed, but I used to have one gigantic spreadsheet, and it just got too cumbersome. So that's why I like to do these planning worksheets on a weekly basis, so I can keep these particular options that are expiring over the next couple of weeks kind of to the forefront of what I need to work on, or what I need to keep an eye on. Most of these currently, when I believe I went into this week, and most of them were out of the money, because again, most of them were puts, and the market, it keeps kind of going up and up and up. Now, when the market did turn around on Tuesday, some of these did get close to being in the money, or might have been in the money. So that's what I wanted to share with you. If you have any questions, comments, or why I'm doing it this way, please leave a comment. I typically try to answer almost all my comments. So thank you for joining me, and look forward to seeing you next week.